Well, good morning and thanks for joining us here on a somewhat busy Thursday. We had the weekly export sales numbers that came out earlier this morning, and they weren't anything to really write home about. I did have a new little tidbit of information that came in from the Climate Prediction Center, and I'll read it to you verbatim on the synopsis. They give a monthly update on what La Nina and El Nino are doing and back and forth. So this time they say the ENSO neutral, or El Nino Southern Oscillation Index is what that stands for. Neutral conditions are expected to begin within the next couple of months and persist through the northern hemisphere spring and early summer. So according to that, La Nina just about has a fork stuck in it here. So it kind of agrees with their last update, where they thought it would probably start fading out by March, and it looks like that's still holding true. Just wanted to pass that along and see if that has much market impact here. Let's go ahead and take a look at our current prices on the big board with our quotes provided by bar chart. So here we go with a look at corn on the March contract right now. We have corn softening up by just a penny this morning, and we're showing a last trade on the March of 677 and a quarter. It just ticked downward one more tick. We have December corn down 1 3/4 at 593 3/4. Well, if you were with us at the beginning of Market Day Report today, you heard Janet talking about how soybeans were like 7 cents higher overnight. Well, that's all gone, and now you have March soybeans going down 3 cents. We're at 15.16 3/4, and now we're about 4 or 5 cents from our low. We are off of our overnight high by a good 17 cents now. You have July currently down 5.5, right at $15.50. Boy, it's a struggle to hang on to that $15 mark. On November, we're down 7.5 cents right now at 13.63 1/4. Now, switching over to the wheat market, it's kind of having some issues too. In Chicago, March down 2 cents at 7.62 3/4. July is now down a penny and a quarter. Meanwhile, when you look at our hard red wheat in Kansas City, you look at March going down a dime now at 8.86, and July down 8 cents on the day. In spring wheat in Minneapolis, March is dropping by 4 cents at 9.22 1/4, and you have July down 3.5. Well, on the cotton market, March is up 37 points at 85.74. So not everything is lost here. You have December, though, down 1 point at 85.29 per pound. I have Chris Swift on the line. He's with Swift Trading, and he's based in Nashville. Interesting market movement after the opening bell here, Chris. What do you read into the fact that the market seemed to be kind of taking it in the knees here today after we got things rolling for a little bit?
Well, Marlin, we've got some information underneath our belt now with yesterday's WASDE report showing a little bit of an increase in our stocks. This morning, we're seeing a little bit lesser exports out there, an improvement in weather, an improvement in fertilizer prices, and in all honesty, one of the biggest South American crops we've ever seen, for which we know that China will begin to pull heavily on when they become into the deliverable position.
So what does that mean? I mean, when it comes to market strategy on the part of the producers here in the U.S., do they need to maybe change their attitude now or not?
Well, I think what we're looking at, when we're talking about an inverted market and the soybean market right now, we've got the highest price available to you today. The incentive is to market it today. And if you thought that it was going to go up, turn around and buy the July for 15 cents cheaper. So what we're getting at, though, is that there may be some old crop strength here back and forth, but the new crop already seeing that we're going to have better planting intentions, more acres out there, that it kind of looks like we probably need to be doing some serious marketing of some grains while these prices are still here. Note that we have been in equilibrium for at least the last 4 to 5 weeks in the grain markets. All of the option premiums have contracted. The prices have contracted. Were something to disrupt this market, it would send it moving sharply one way or the other. So be prepared for that. If that's going to hamper you to the downside, buy some puts right now while the market is still consolidated here. If it doesn't break out, then you paid at least the least amount for those put options that you could have.
Sounds like good advice. All right, we'll take a look at our livestock trade in just a moment with help from Chris Swift. Let's continue on with our look at our market action here. Now that we're about 45 minutes deep into our trading day, we'll begin with our live cattle on this segment. And on our quotes provided by bar chart, just a very slight a stronger move in the market. You have April live cattle 7 cents higher. Whoops, now only 5 cents higher. 2 ticks higher at 163.75. It's about a dime off of our earlier high today. You have June now trading 7 higher at 159.85. Let's switch over to our feeder cattle market, see if there's any more excitement over there. A little bit. April feeder is now 27 cents higher at 191 even per hundredweight, and the May 52 higher at 194.95. Goodness, look at that August up there at it touched 208 this morning. Pretty lofty levels on those feeders. On the lean hogs today, you have April now 75 cents lower at 83.32. May up 80 at 93.02. Let's go back to Chris Swift. Chris, do you think there's any impact here on the livestock trade from the export sales numbers, or what's driving it?
No, not really. And honestly, there's not much driving it at all. We're seeing a very sluggish cash market. And the futures market aren't doing much either. We're sitting right at contract highs in the fat cattle market. We're approaching some contract highs in the spring months for feeders, making new contract highs in the fall months. And all of this is optimism in hopes that somebody will really actually pay those prices when that time frame comes. So, again, we're still dealing with the same thing in the livestock market we have been, reality of today and who's actually going to pay those prices versus the optimism of the futures, believing that somebody will.
When you look at a 6-month chart on lean hogs, what does that chart tell you anyway? I mean, are we near a bottom right now?
No, when you look at the index, from the index standpoint, we're still significant dollars below all of the futures contracts. Here, April still $10 before we get to it. We understand that there's a seasonal tendency for livestock in general to kind of soften the next couple of weeks from end of February into about the first week of April. So we might see a little bit weakness, over the next several weeks, and then it could get back strong again, especially because of how much pork production that we've lost over the last couple of years.
Well, thanks for all the information today, Chris. Good to hear from you again. Chris Swift of Swift Trading, based here in Nashville, with a look at our markets today. Kind of a sleepy start